Good morning. Welcome to Bazaar Morning Call once again. You have the Nifty that is facing a bit of resistance at the 23,000 mark. So this morning as well, not looking like a good start, a bit tricky, but let's see how it goes. Our research team is standing by with CNBC TV18's list of top 10 stocks for the day. And of course, the big one to focus on will be Hindalco and Novelis. Nisha is joining in to give us the latest on that. Nisha, over to you.
Thanks for that. Yes, the price band is out and so is the valuation. And as we had earlier reported, $1 billion is what the India-listed Hindalco, the parent company of Novelis, is seeking to really raise from this large monetization exercise from its US-based Novelis. Now, as per the amount and the other numbers that have been stated, it's $12.6 billion at the higher end of the price band, which is the valuation that they are looking to achieve. In terms of green shoe options included, the total fundraise could be about $1 billion. Without the green shoe option, it could be around $950 million as per the higher end of the price band, which is at $18 to $21 per share. Now, also to note will be that Hindalco will be left with 91.5 or 92.5% stake in Novelis after this IPO process is over. We know that it's a wholly owned subsidiary, 100% is owned by Hindalco. So in terms of impact, first of all, it's the largest and the first large US listing by an India-owned company, and in terms of monetization and SOTP valuation, again, has seen a slight positive movement with the valuation of Novelis in IPO, and the future fundraising ability of Hindalco also improves.
All right, thanks a lot for that, Nisha. You know, when this news first came out, that was in February odd, the stock was at around 520 rupees. So from there, the stock is up close to around 25% approximately. Some part of this good news has been, priced in. And also you've seen that aluminium prices have moved up. So the base, business that's here in India has got a bit of a bump up. So, from that 510 odd mark, it's seen a big recovery. Just a couple of points out here. Post-listing, there will be a holding company discount. So just keep that in mind. So that's why the stock may not run away. And point number two is, the FI is close to around a fourth of the entire holding of Hindalco here. If they list Novelis, then some of the FIs will say, maybe, just maybe, we'll take direct exposure to Novelis itself. So just 2 points I wanted to add on to what Nisha said. So keep that in mind as well. Stock opens up in the green, but it may not run away because of a couple of these factors. Let's go to Sudarshan. Sudarshan joins us to tell us about PNB Housing. Morning, Sudarshan.
Morning, Naija. So yesterday we saw block deals of in 5 equities of more than rupees 4,000 crore, and today there is another block deal likely, and that's in PNB Housing. Two foreign portfolio investors, Asia Opportunities Mauritius and General Atlantic Singapore, are likely to sell 2.7% equity. Talking about the details of the book, size is of 500 crore, floor price is seen at rupees 717 per share, which is a discount of 5% to yesterday's closing price. And as of March 2024, holding of General Atlantic Singapore was at 9.82% and Asia Opportunities Mauritius at 9.88%. The reason I'm going with red, because of two reasons. First, floor price is at a discount of 5% to closing price of yesterday. Second, Asia Opportunities Mauritius had bought 9.88% stake at a price of rupees 821 per share. Now it's likely selling at 717 per share, which is a discount of fall of almost 12%.
All right, so thanks very much for that. IRCTC is the next one we're looking at. Mangalam is here with details on this one. Mangalam, morning.
Good morning. So it was a mixed set that came in for IRCTC. What was good was that the revenue growth came in at around 20-odd%, but the margins of the company actually did see a bit of a compression. So as a result of which, we have seen margins for the entire segments of the company, all the segments come lower. So about 19.7% in terms of top line, the company's reported revenues of around 1,155 crores. The EBITDA actually has grown just about 11.5%. That implies that a margin compression of nearly 220 basis points. The key segment of the company, which is ticketing, internet ticketing, out there the revenues grew 16%, but the EBIT grew just about 5.5%, implying a margin decline of nearly 800 basis points. So I expect the stock to see a bit of a red at open today.
Okay, so that's on IRCTC, but plenty of other stocks in focus. Let's see how IRCTC opens up in trade today. Amara Raja Batteries is the other one that I'm looking at. Good set of numbers coming in, so I'm going with green over there. Strong top-line growth of 15% is what Amara Raja has seen this time. The margins are also quite stable, although the operating profit margins are flat at 14.5%. The gross margins have come in at 34.5%, which is a growth of 150 basis points year-on-year and 54 basis points quarter-on-quarter. So the street will definitely like that. And the profit growth is up almost 63%, coming in at 228 odd crores. But it's important to remember two things. One is that the stock has rallied quite a bit. In the last 6 months, the stock is up 80%. So maybe a lot of the good news is in the price. And the second is the stock is now higher than its, average multiples it has traded at in the past. So it's currently trading at 18.5 times FY25 price to earnings ratio. So just keep that in mind. But numbers are good nevertheless, and going with green on the stock. But Upasana is joining in. She has AB Fashion and RR Kabel on her radar. Upasana, good morning.
First up is ABFRL. The company's losses have widened, but company has recorded a strong revenue growth and margins have also expanded sharply. The company has seen a revenue uptick of 18% on a YoY basis, and margins have seen an expansion of 170 basis points at 8.5% on a YoY basis. While the losses have widened from 194 crores to 266 crores on a YoY basis, and company says that currently in a weak demand environment, management is focusing on improving its profitability. It has also said that consumption has continued to remain sluggish in the past 6 to 8 quarters, and company's net debt currently stands at 2,862 crores, meeting its FY24 debt guidance. The next up is RR Kabel. The revenue has seen a strong uptick of 16% on a YoY basis, which was mainly led by the company's main segment, that is wires and cables. Coming to wires and cables, the company recorded a revenue of 14% on a YoY basis, and margins saw an uptick of 50 basis points at 8.7%. In terms of revenue mix, wires and cables contribute 87%, and loss-making FMEG contributes about 17% of the overall revenue mix. The company's consolidated EBITDA margin stands flat at 6.6% versus 6.7% on a YoY basis, and PAT has seen an uptick of 21% on a YoY basis. Hence, I expect both these stocks to open in green today.
Thanks a lot for that, Upasana. Well, let's hop across to Ekta. She's here to tell us about Aster DM and MedPlus Health. Ekta?
Morning. Well, I'll start with MedPlus. The revenue was up around 19%. The margins improved to 7.1% versus 6.5%. So there was a marginal improvement which took place, but still in single digits. Profit 33.4 crores increased. 1.1% increase in private label sales this quarter. So that was a bit of a dampener, but it has been the case in the past couple of quarters. But the diagnostic losses are reduced to 1.1 crores versus 3.4 crores Q on Q. So that is a positive. Aster DM, revenue was higher. Remember, it's only the India business which was reported this quarter. 973 crores, margin 16.4%, which was better year on year. Loss of around 24 crores. The average occupied beds for FY24 was up 12%. The RPOP, which is average revenue per occupied bed, was up around 10%, which is also positive for FY24. I expect both these stocks to probably be in the green. Aster DM could be weighed down because of the reported net loss.
Right. Lisa, thanks very much for that. We'll, of course, have the management of MedPlus join us a little later to talk about the numbers as well. But back to Mangalam, Campus Activewear and NBCC in focus. Mangalam.
Well, Campus Activewear, the revenues grew by about 4.6%. One would say that it's a small revenue growth given their history of growth, but FY24 was a tough year for all the footwear companies. What was positive was that their EBITDA grew by 13%, implied a margin improvement, and the net profit also surged by about 42.8%. The companies renewed their focus on trade distribution, ASPs increased as well, and they repaid some debt. So see some green on Campus today after a big drubbing that the stock has seen already. NBCC, on the other hand, has reported a very good set of numbers. The revenues grew by about 43%. The EBITDA too grew by over 130%. Margins improved. And all of this was led by their PMC business, where the revenues came in near 3,700 crores versus 2,500 crores itself. So good numbers for NBCC. See bright green on that stock.
Okay, thanks a lot for that. Well, let's move on and get you a quick recap now of our top stocks. Stocks with positive news flow: Hindalco, Amara Raja, Aditya Birla Fashion, RR Kabel, MedPlus Health, Aster DM Healthcare, Campus Activewear and NBCC. While stocks with negative news flow: PNB Housing Finance and IRCTC. But let's also get a quick word on what's happening in the world of commodities this morning. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the dollar, which is steadied ahead of the U.S. inflation data. I mean, that is going to be the big thing to watch out for the rest of this week now. And ahead of that, with the dollar strength, we're looking at a bit of profit taking that you can see across the metals as a sector. So whether it's about gold, we have seen prices hold around that $2,355 an ounce there. The markets are also looking at a silver prices trading very close to 11-year highs. The physical silver buying for industrial use has been higher, and that's exactly what really has been supporting platinum as well, which is trading very close to its 13-month highs right now. Copper prices also gained up by 1.5% overnight. So metals as a sector continues to do well. What also is doing well is the crude oil price is now trading at a 4-week highs at $84 a barrel. Well, the U.S. summer demand season seems good. The renewed geopolitical unrest in Middle East also has added premium to prices. The street will also watch out for the U.S. inventory data today and the OPEC and allies meeting on 2nd of June. That is where the new direction would come in from.
All right, Manisha, thanks very much for that. So that's commodities and oil with a bit of a bump that we saw last night. We'll take a break. Deven Choksi of DR Choksi Finserv will join in with some stock-specific conversation on the other side. Stay with us.